Well, yesterday I expressed concern about Bitcoin not being able to hold this 21-day moving average, and now you see why. Good morning, guys. It's Keith Allen, and as you can see, the breakdown continues. A fresh new red trend precognition down signal. This one, obviously, still tentative, but looks like it's pretty valid to me at this point. These will confirm in print a candle close, a move above yesterday's high would be the invalidator. That's at 68,249. So where do we go from here, right? We've been talking about these targets day after day, and obviously, where our high is at the moment still remains as the high. We talked about, finding a local bottom, and I used quotes on local bottom yesterday for a reason, and I want to show you why. So if we move over to fire charts, we can see that we had, a good concentration of bid liquidity down here at this 60K level, right? And a lot of that was pulled. Some of it was moved. Much of it was pulled. And then we had, Powell's, the FOMC meeting and Powell's comments, et cetera, et cetera. We had a bit of, whale games as we typically see around those events. And now this area is thinning. And that is a concern for me because if we look at the historical data, right? If we look at, what the regions look like where we've typically seen those big bounces from, then we see areas with heavier concentrations of bid liquidity, right? Now, back in January, I was looking at this and said, oh gosh, we have like over 200 million stacked here at this level. And so I felt good about this area, and obviously we see what happens. Now, these straight lines, those are the bigger concern for me, right? Big straight lines, I've always said, are not sustainable, and we're seeing that play out now. We actually have a full retrace on this move from 62 coming back right now. And we're coming back into a pocket of decent bid liquidity, but is it enough? Look, historically, we got big concentrations like this. We had back here 111 million right here. This was the FTX crash in 2022, right? Bigger bull runs come from larger concentrations of bid liquidity. Now, yes, you do want to see it stacked down and laddered down like we have here. This is good. But what we want to see is, more coming into the upper, to the near range closer to price to really see this thing kick. Until that happens, we have the potential to grind down. Now, at the moment, we're not seeing any significant bid liquidity down here below 50. And so I don't see a lot of sentiment at the moment to go down into this 44, 45K range, which I really, really like as a target, by the way. Now, nothing makes liquidity move like price, okay? So if price continues to erode, we will see bids come into this range, but at the moment, there doesn't seem to be much sentiment for that. So let's zoom back in a little bit and see where we stand, as obviously we're headed into a monthly close not too far from now, right? We're about a week away from a monthly close. So that's something to consider as we watch price action evolve here, okay? So at the moment, yes, this I think we could say is a local bottom, but we don't know that this is really going to hold as the bottom before we get this next leg up. So let's go back to the candle chart here and zoom in on this a little bit. I'm going to clear out these trend precognition signals so we can make some sense of what's going on. Obviously, here we have this breakdown on the 21-day moving average, which historically is not a great thing to see. It's even worse when it happens on the 21-week, but let's just look at history, right? Look at this. Look at this breakdown, okay? Losing the 21, not a good thing. Obviously, that led to the bear market. We rallied back here, lost the 21. These are daily moving averages here. And guess what? Not a good thing. Reclaimed it, lost it again. Not a good thing. So losing this 21 is not a good thing. On the weekly, it's really a big deal. When you lose it on the weekly, you could be losing it for a long, long time. We've got a long way to go to get there, right? That would get us down. And of course, these are going to change over time as price moves. So these could drag down a little bit or up, but that would, potentially give us some focus on that area if we start, losing these areas right here. So at the moment, this is the 58 to 60K range right here. Why this is important is because we have some history there where price had consolidated. This acted as strong resistance moving into really what I consider to be the top of the market of the prior bull market back in 2021 to 2022, right? 2021. And then, things broke down here. This is where whales started distributing. We had a distribution rally come back and bring us to a new all-time high. So this was resistance, and then it came support for just a few weeks here. Let's see, 1, 2, 3, for about a month, and then it broke down. So this is a strong area that we're looking at in terms of a potential support area coming in. Okay, so this would be our first line of defense here, 58 to 60, which, as you can see, correlates very well with where the liquidity is stacked at the moment, right? You want to see this hold. If you're a bull, you want to see this hold. If not, then we have to start looking at the other levels, which we've been doing every single day at this point. And obviously, that takes us to prior areas of consolidation. We had some consolidation in the 50 to 52K range, and that also is historical. As you can see, it was an RS flip zone, right? From that first that first top back in 2021, and it became support briefly, and we lost it, right? It was resistance, and then it became support briefly, and then we lost it. So not a super strong level, not as strong as 58 to 60, I would say, but that would be the backstop to losing the 58 to 60 level. The next area I would look at, should that not hold, would be this range right here, right? 40 to 45. We had some good consolidation here. This is what I consider to be a good foundation for, for a stronger leg up, a stronger move up. You want to see these areas of consolidation. So if we happen to get one here, right? If we start to see some consolidation here above this 58 to 60 range, between here and the all-time and really the 2021 top, which was the all-time high of 69K, if we see some consolidation here, that would not be bad. But what we really want to see is price move back above this 69K level and give us full candle bodies up here. We had one day with a full candle body above there, and that was the local top, right? So if we look now in terms of having eyes on the monthly close, where that could potentially take us, because monthly closes and weekly closes, they like to get tested, right? So we had a phenomenal candle in February, right? That was a monster, right? But what do we say about straight lines? That is a big giant celery stick, 43%, 44% candle there, right? So where did it close? It closed at 161 on Bitstamp. Might be a little different on your exchange. I use this one as kind of the benchmark because it's got the most history. So 61.1 would be up around this level, right? So that's above this red box right here. So let's say we test this and we grind in this area for the rest of the week. We challenge that maybe at the candle close. Whether we dip below it or not remains to be seen. I really think that if we lost this level, that would take us further, right? So above 58 is what you really want to see hold for this to have some strength and have a better chance, I would say, of holding for a potential green close. So that's what I'm looking at here. We also, of course, have been monitoring the ETF flow. And yesterday was the fourth consecutive day of negative flow here, right? So what this tells me is that, something that, quite frankly, I've already known and I've been trying to share with people for a long, long time, and that is that up only is a moon boy fantasy. It does not exist. And this is showing me that these institutions are smart, they know what they're doing, and that the euphoria of the ETF has leveled off. And now, obviously, a lot of this is still coming from Grayscale, right? So that's also noteworthy. We talked about this a little bit yesterday. Many of these Grayscale customers are longtime holders from back in the triple digit and 4-digit days of Bitcoin. Okay, they had coins locked up. These are profit takers at this point. So keep that in mind. These longtime holders are taking profit right now. Remember last month we were talking about Jeff Bezos taking profit. We were talking about other CEOs of large corporations taking selling stocks because they expected a bigger downside move. So maybe that's something that you shouldn't be ignoring. I'm certainly not. But, also noteworthy is that most of the other entities, actually all of the other entities, were net positive yesterday, although numbers are backing down a bit. So the fact that this is leveling off, I don't think the demand is leveling off. I just think they're getting wiser to the market. This is kind of a new asset class for a lot of traditional, a lot of TradFi investors. So they're now wise to the volatility. They expect a pullback. At least these who were in great profit certainly expect a pullback. Yesterday or the day before, we saw a little bit coming out of the Invesco bin. But all in all, they're still net positive for the other entities. So you could really almost take out the grayscale outflows in terms of trying to gauge what the sentiment is. This is not, in my opinion, reflective so much on the long-term view. This is more reflective of customers who are in good profit, who want to avoid these 1.5% fees. Many of them may be rolling into, one of the other institutions because they still believe in the asset class, and they'd rather pay a smaller percentage fee on their holdings. But we will continue to keep an eye on this, of course. But moral of the story is up only is not a thing. So let's go back to the charts here and see on fire charts, if we drill down onto a lower time frame, what things are looking like here. Obviously, we're seeing some selling in all classes, including that red class that has been dominating, very aggressive TWAP buying since Christmas. Purple has always dominated the order classes in terms of price action for Bitcoin, but those moves from red certainly amplify things, right? So when purple is selling and red is buying, then that slows down. That kind of absorbs a lot of the sell-off from the whales, and that has held price up through a lot of this, right? But when both classes are selling is when we really start to see price to degrade. So that's what we're seeing right now. And as you can see, pretty much all classes are bottomed out in terms of how much their net selling pressure has been. Green starting to buy a little bit here on this little bit of bounce right here. And this liquidity, this is so thin right here that if they clear this, price can shoot right back to 60 to this 65.5 level. I mean, like a hot knife through butter. There's literally almost nothing here, less than $1 million between where we sit right now and that 65K level. So price can move through these illiquid zones very, very quickly, and it has a hard time moving through these zones that have liquidity. Consider this friction. Consider this just, air pretty much, right? So keep that in mind as we head into the weekend. We have these pockets of thin liquidity that we need to be mindful of. Liquidity dampens volatility. Thin liquidity amplifies it. Keep that in mind. So will this hold? Will this 58 to 60K range hold at least as guardrails through the weekend or potentially through the monthly close? That's what my eyes are on at the moment. Hope that gives you some insight. Nothing I say or share should be considered trading advice of any way, shape, or form. I just want to show you perspectives on both sides of where price could go. And on that note, real quickly, we'll look at what the top side looks like again. Let's take this down to the daily. So obviously the first challenge here is to clear that 21-day moving average. That's currently around 67.5, and then to clear the prior 2021 top, that prior all-time high of 69K, we need to see full candle bodies up above this level and then work our way towards this lifetime channel, which I believe is where price discovery really exists. Let's zoom on. Let's back it out so you can see what we're talking about here. This is going to be a challenge, right? We already had one rejection from this level, right? And this level moves up. So let's say that price never makes it back into this range. That's conceivable at this point, right? It is certain nothing is off the table. It's conceivable that happens, and until we make it in here, until price makes it back above this level and stays above this level, This is where real price discovery happens. This is where we start seeing those crazy, crazy numbers that some people forecast. Otherwise, it could be a grind, and it could take years to get up there, right? So keep that in mind. This, in my opinion, is the glass ceiling for Bitcoin. This is the glass ceiling for price discovery until we make it back above that channel. Once we get in there, it's a whole new ball game. But until then, that's what I'm looking at. Hope it helps you out, gives you some insight. And man, I got to say, I really appreciate the comments. And for those of you guys, those of you who are telling me that these analysis are helping you out and that you are protecting profits and you're stacking sats because and improving your cost basis because you're watching these analysis, that makes my day. So I appreciate those comments. Please keep them coming. Your comments help me grow the channel. Your likes and shares help me grow the channel, and that's what I'm trying to do here. So I appreciate all the support that you guys are showing me. And as long as you guys keep doing that, I'll keep kicking out valuable content for you because that's what I do. If you're interested in any of the tools like fire charts and trend precognition, you can check them out over at materialindicators.com. In the meantime, we're heading into a weekend. Spring break is starting for a lot of our families. So I hope you are planning to spend some quality time with the people you love, doing the things you love. That's what I'm going to be doing this afternoon. I hope you get to do the same. Hope this helps you out. Hope you have a great day and a fantastic weekend. And as always, trade safe, my friends.